Hello traders, my name is Logan with Funding Talent. Today, February 5th, we're going to be doing our live market analysis for you and showing you our analysis for this week and the fundamental drivers behind the analysis. We hope this video can provide you some insight into what you can trade this week and why. So, without any further delay, let's get right into the charts. Alright everybody, so before we get into the charts, we're first going to dive into the fundamental drivers and the news of this week. So, on our list of news, the only high-impact red folder news we have this week is on Wednesday, February 10th. This news is 12 p.m. and 2 p.m. Eastern Standard Time and is for GBP and for the dollar. This is when the Bank of England Governor Bailey speaks and when the Fed Chair Powell speaks. So, on those days, be sure to tighten up your stop losses and be extra careful around those times. But besides that, seems like a very easy week for us ahead, and I'm definitely looking forward to it. So, also, government data shows us that non-farm payrolls increased by 49,000 in January. In the prior month, there was a downwardly revised 227,000 decrease in December. And compared with a median estimate for this last non-farm payroll that we just experienced on Friday, it was estimated that we were going to have 105,000 gain. But I've also seen from other sources that it was a 50,000, so we were actually pretty close to the other source. The unemployment rate also fell to 6.3%, which is great news. The latest figures underscore a labor market that continues to struggle, even as the other parts of the economy have rebounded and may elicit more urgent calls for the stimulus package. While this at first seems like a peak at risk off market sentiment, I do actually view this news will help us propel the timeline for getting the new stimulus passed, which will actually help us, as we discussed, move forward the economy and overall intensify our risk on market environment. Janet Yellen, the U.S. Treasury Secretary, has been calling to go big. With the recent news of the slowed recovery, she will most likely use this as ammo for that agenda and push this to contribute to the stimulus package and therefore, as I said previously, further our risk on market sentiment, which we've kept for the last 3 weeks. And it looks like we may be able to keep this for a pretty long time considering the amount of news, great news that we're hearing about the world and how investors are spending their money. So, to touch on risk sentiment, again, just like last week, this news also expands on our risk on market sentiment. That means expectations are higher for further economic growth, and if you've been watching these, you already know that. And that also means the Canadian dollar, the New Zealand dollar, the Australian dollar, the euro, and the pound are likely to appreciate while we're in this risk-on market environment. So, vaccine update as we usually do. Almost 60 million vaccine delivered, and 35.2 million administered, which was at 26.2 million last week. So we are having a pretty good rate, but it does seem to be going a little bit slowly, and I was actually reading this today, that it's going to take 7 years for life to return to normal if we keep the current pace that we're keeping at, which is kind of crazy to think about. So, now we're going to go into the charts. So, to start off our analysis this week, we're going to be looking at DXY. If you remember from last week, we actually found this head and shoulders on the 4-hour chart, which we ended our 5th wave, completed our A wave here, then our B wave, and then actually looks like we completed our C wave. So it looks like we're getting a retracement back down to this neckline, which is also a support fractal on this 4-hour time frame. So what I'm going to be looking for is a retest of this and then a push higher. And we also have this bottom support line, which we can be watching here. If we break this support line here, then my bias will change. Until then, my bias is long. For USD JPY, we talked about this for the last 2 weeks because this pair has been performing phenomenally. We caught this trade 2 weeks ago from this 103.78 level up to this 104.68 level, and prices just continued going higher. To me, this looks like a standard 3-wave rally. We can be expecting a decline for our 4th wave down to this 104.75 level or this 104.69 level because that is our zone. So, the other reason that I'm actually calling this as a top for our 3rd wave as of right now is because this has reached the 1618 Fibonacci extension level from our 1st wave in our 3-wave rally. So, we can be expecting a retracement down to those price levels I just said, and then a push higher. If we break this 104.39 level, that will cause me to change my bias short but until then, my bias is long, just as it is with DXY. This actually is playing out exactly as DXY would, and it would be pretty nice to see these two pairs play out together, as they do correlate, both being USD pairs. For Euro USD, we're getting a great setup here, and this actually aligns with our DXY analysis as well. As you can see here, we had our head and shoulders, which I identified for you guys last week. We got a clean break and actually could have turned out into a pretty decent trade. So after we got down to this 1.9 level, we started a retracement, which I think can be expected to go back up to this 1.205 level. And then we can see the next push to the downside, which will be our final take profit for this head and shoulders. And it just so happens that lines up around our 50 Fibonacci retracement level. And as I was saying last week, our final take profit for this head and shoulders trade will be a 1.19 level. Moving on to Bitcoin. I've been watching this all week. We formed this triangle, finishing our C wave with a flat correction, and since then we've been uptrending, retesting the higher bound of this triangle. As you can see, we actually broke above on the 4-hour time frame, not yet on the daily, but I'm not completely sold on this going higher yet. In order to do that, we have to break this high, which is at the 38,680 level. If we can break out of this 4-hour resistance fractal, then we can expect price at least to be returning to its prior highs, which is 42,000, almost 100. For our next week, I can be giving you guys price targets that I might be setting for Bitcoin. Moving on to USD CAD. As you can see, we actually identified for this last week as well, and we've been coming up just as I predicted. We're getting halfway to our weekly resistance fractal, which is just up here at this 1.299 level, and we've just broken out of this bottom symmetrical triangle in the middle of our impulse wave. So what we can be expecting here is potentially a retracement of this wave coming back down to this support, or we can see a small retracement before continuing higher. For AUD/JPY, we are on a daily chart. This pair has been going exactly how we thought it would the last couple of weeks. It's been going higher and higher. We've been getting some consolidation around this 79.9 level. But it looks like we're about to break out of this weekly resistance fractal on this daily time frame. So if we do that, we can expect price obviously to continue higher. If we pull back and retrace from there, then we can be expecting for this wave to end and enter a retracement before coming higher again. GBP/JPY. GBP/JPY has been acting just as AUD/JPY has, and it's just been going higher. We're now in the middle of these two support zone right here. Now we're in the middle of these two zones. We have a support zone right down here at this 142.63 level, and then we have another resistance fractal which forms at the 145.86 level. We're going to be watching how price reacts between these two zones before we get a clear direction of trend and before we enter any trades, because trades always require a confirmation of trend or your bias before entering. So again, we've gone through the dollar index, USD/JPY, Euro dollar, Bitcoin dollar, dollar CAD, Aussie yen, and pound yen. Now, we'll go back to the slides to finish up this market recap. So, I just finished performing our weighted currency basket analysis, and not much has changed since last week, which makes sense because our market sentiment remains the same. On all of our weighted averages, the only thing that's actually changed is I can see the Swiss franc falling, and there's no more indecision on the Australian dollar. I believe the Australian dollar will go higher now, and we've added a little bit of indecision to the Canadian dollar. There's not a clear direction of trend that I can identify, so I'm not entirely sure where it will go, which is why we, as I just said, will wait for confirmation before making a trading decision. But if you would like to see how I actually perform these weighted currency basket analysis, please let us know in the comments, and I'd be happy to share it with you guys.
So that was this week's live market analysis. I hope this video has brought you some insight into what you can trade this week and why. If you are not already following us on all of our social media platforms, be sure to do so because we're releasing content every day, and we will be releasing these videos every week for you guys on Monday. So, on behalf of everyone from Funding Talent, as always, happy trading.